It's about that time of day again. My name is Joseph. Thursday evening, February 22nd. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Starting off tonight on oil, crude is bullish and just reached its measured move target. That tells me to stay patient and look for buying opportunities after a two-legged pullback tomorrow morning. Over the E-minis, the S&P is range bound with a triangle pattern, and that tells me to fade the edges at the highs and lows of the range with failure patterns tomorrow. Nasdaq is also going sideways. Nasdaq has its own triangle pattern for tomorrow, and that tells me to focus on failures up around the highs, down around the lows, and avoid that middle on the NQ tomorrow morning. And of course, for tomorrow, gold is bearish, but I need to get below a key support level on the chart tonight before I can start looking for selling opportunities going back down below. The euro, wrapping up tonight on the euro. Euro is bearish with a beautiful spike in channel pattern, and that tells me to look for selling opportunities using buyer failures up at the highs tomorrow morning. We'll get a great newsletter in store for you guys and gals tonight. We get a couple ranges, we get a couple strong trends, and we got a really important topic about those rising support levels, which we'll dig into on the gold and the euro. So make sure you stick around towards the end of this video because we got a bunch of great learning and hopefully earning opportunities for you tomorrow. Before I jump in and put the plan together for Friday's session, we got a big plan to put together for tomorrow. I want to remind you, if you're on YouTube right now, don't forget to subscribe to the YouTube channel. Hit the little bell icon, right? So that way you get notified every time I post a new video. And as I go over all the topics tonight on our newsletter, if you have any questions about anything I'm talking about here, terminology, strategy, whatever it comes, any questions if you're on YouTube right now, just drop those questions in the comment section below. Also want to make you aware too, all of the links associated with this video are also going to be in the description of that YouTube video. So make sure you dig into that description for things like our free trial, the download charts, and things like that. If you're on the blog here at sidewaysmarkets.com, this is our main trading blog. Again, you'll find the links, the description if you're on YouTube right now. Make sure you join our mailing list. You know, I don't put everything out on our YouTube channel, so make sure you put that name and email address into that mailing list, and I'll shoot you an email whenever anything new happens at School of Trade. And then also, don't forget, I'm always posting exclusive content, stuff you can't find anywhere else on the interwebs, on my stock twits, Twitter, Facebook, LinkedIn. So whichever type of socializing you like to do out there, right? Follow me on social media, and you'll get exclusive content, charts, links, and updates throughout the week. And speaking of charts, how easy is this? You won't get this on YouTube. This is just on the blog at Sideways Markets. There's a link right below the video tonight. If you click that link, it'll give you a chance to download all of the charts from tonight's video. Now that's important because tomorrow, if you're not with me in the trade room, you'll be able to use those charts to kind of guide your way through, right, tomorrow's session. If you're with me in the trade room tomorrow, obviously we open up at 8 o'clock and we'll do this together. But if you're not, right, those charts can really be a great benefit for you. And speaking of tomorrow's session, how about a free pass? You know, I got a great free pass. Come out and join me as a guest in the trade room. So if you're not a member and you'd like to see what all the commotion's about, right, see why we're so popular here on the interwebs, grab that free pass in the upper right-hand corner. Come out and join, right, as a guest for a few days this week or next week in the trade room. I promise you will not be disappointed. If you like our newsletter, you'll love our free pass. And then again, if you have any questions on YouTube, put them in the comments section. If you have any questions here about anything we talk about, I also have a live support tool on the right-hand side of the website. All right, so thank you so much for your patience on that. Get the introduction out of the way. Let's roll our sleeves up and let's get started, shall we? Tomorrow's Friday. We always seem to have a pretty darn good day on a Friday. Now, Friday, the 23rd of the month. Let's talk about this Friday. Now, first of all, there's really no big news tomorrow. There's not much here. As you can see, we got GDP from Germany, but it's only a Green Star news event. I'm not expecting much out of that. We got CPI from our good friends in Canada. I just don't expect any of this news to be headline news tomorrow. Now, there's always going to be there's always possibility that some crazy thing will happen tomorrow. So we'll definitely be keeping our eyes and ears open on the news wires tomorrow. But as far as scheduled news goes, there's not much here on the calendar here for tomorrow. Now, the most important thing for tomorrow is going to be watching those milestones, right? So 9 o'clock is the opening bell. Oh, let me go back here. 8:20 is the opening bell on the currencies and the gold, right? So euro and gold. 9 o'clock is the opening bell. That's the wrong key. 9 o'clock is the opening bell on oil or nat gas. I trade oil. And then, of course, 9:30 is the opening bell on the E-minis, so Nasdaq and the S&P. And then I always pay close attention to 10 o'clock. We call it the 10 o'clock shock in our trade room because it oftentimes shake things up quite a bit. And then on Friday mornings, normally I would say 11 o'clock is the transition into lunch. But on a Friday morning, I always start watching around 10:45. Really after 10:45, I start watching that price action. And oftentimes on Fridays, we see the market continue to move into 11 o'clock. But it seems like for every time that happens, there are 2 or 3 times where it kind of dies off going into 11 o'clock. And that brings me to my kind of the big topics of a Friday. So these are the main milestones for tomorrow. Depending on which market you're trading, those are the opening bells. And of course, we got the 10 o'clock shock, top of the hour, and then the transition into lunch is at 10:45. Two big things you want to kind of keep in mind for a Friday are going to be early in and early out. We talked about 10:45, but in all reality, anything after 11 o'clock on a Friday morning, you really got to have a good reason to be getting into new trades, taking on additional risk. I remember when I was a new trader, when I was a new trader, I was the worst trader on the planet. I think I lost money almost every day, and when I did make money early in my career, it was just to give me some more excitement to get back in to lose more the following day. So I remember being on a Friday afternoon trying to dig myself out of a hole that I got myself in that week and just losing more money. And that happens a lot on Fridays. So I know it's not easy. I know it's difficult. Trust me, whether you're having a good day, a good week, a good day, or a bad week and a bad day, it's tough to walk away on Friday as we go into the 11 o'clock hour. Whether you had a really good week or you had a really bad week, it's tough to walk away on Friday. But I'm telling you, the low volume and the increased volatility that comes at the end of the week, traders start taking bigger risks. Professionals aren't trading late in the day on Friday, and that creates a cocktail that really can be a disaster. The typical patterns that you use during the week aren't going to work as well as you get later in the day on Friday. So early in, early out. I always tell my clients, you're more than welcome to hold a position or to manage a position into the closing bell on Friday. I would not recommend, though, taking on more risk on Friday just because it's difficult to get that reliability that we've grown accustomed to Monday through Friday morning, right? Friday afternoon, it's a different ballgame. The second thing, kind of the second big topic for a Friday, is going to be those prior week open, high, low, and close levels. The most important are going to be the high, low, and close levels, the HLC. So you're going to see a bunch of those marked up tonight on the charts, and those will become magnets. A lot of times we see as we go into the end of the week, the market tends to get stuck around these prior week highs, prior week lows, or prior week closes, right? As we go towards the end of the week, last week's levels become magnets. As we go towards the end of the month, right? Coming up next week, right? Next week's end of the month. As we go into the end of the month, we start watching the prior month levels. Okay, so just keep that in mind tomorrow. Early in, early out, prior week, open, high, low, close. And again, I know it's tough. I realize it's not easy to walk away on a Friday for whatever reason, right? Whether you're way up on the day or way down on the week, right? It's difficult, but you have to have discipline. And that's where my trade room may come in handy. My trade room I'm notorious for telling my clients, don't you dare do that right now, right? Don't make that mistake. That mistake cost me money and time, 10 years ago, right? So I tend to be really strict on my rules in my trade room, and I do that because we need that discipline, right? A lot of us, at least when I was a new trader, I didn't respect risk. I didn't respect the rules. I was more gambling when I was a new trader. Now, 10 years later, right, I really try to run my business like a business, right? Protecting capital, open and close times, doing things the right way for longevity. Okay, we'll talk more about that tomorrow. We open up our trade room 8 o'clock Eastern time. Hope to see you there. Tonight, wrapping up the week here. Got a big day tomorrow here. We got Crude tonight, S&P tonight, Nasdaq, gold, and of course we'll wrap up on the euro. We get some strong trends, we get some ranges, and we got a couple interesting scenarios here that I think you guys will learn from later on in the video tonight, so make sure you stick around. And don't go jumping ahead, all right? We got a lot of good stuff here on the way to get there. All right, first of all, over here on oil. Oil is clearly bullish, definitely not bearish. We're clearly bullish and trading at the low of a channel. But that measured move tells me something. You know, normally I want to buy the low of a bull channel, but the measured move tells me to wait for a two-legged pullback down into support levels, right, tomorrow morning. So there are a couple components here, okay? First of all, right, we have that bull channel, right? We draw off that low up to that high, and you can see here we are now trading at the low of a bull channel. I want to be a buyer. I definitely want to be a buyer coming off of the low of that channel. But there's another big component of this chart, and that is a strong move up, a pullback, and another leg higher. We call that a measured move. And most people would call this an AB equals CD, right? Or a symmetry pattern, you know, something of that nature, right? A symmetrical two-leg extension. So it's two legs up to a measured move. And you can see that you get some buyers now taking profit. Now, typically what happens on a measured move is we see a two-legged pullback down to a level of support, right? And so, of course, I've got support levels marked up at 62.41, 62.13, right? So two-legged pullback down to support, and then most often that moving average will come over, right? The moving average will come over. And what happens is when we see a move like that, a two-legged move off the high, there's a lot of traders, and we talked about this earlier on this week in a video that I called the Scalper's Curse. And that is a lot of new traders, this is what I did when I was a new trader, they use much too fast time frames, right? And I would use an 89 tick or a 144 tick chart, way too fast. You know, it gives you a lot of patterns. It allows you to use a small stop, but it doesn't give you the benefit of seeing the big picture, right? So a lot of times scalpers or short-term traders, right, you know, a little bit uneducated, inexperienced traders, they start looking at this move off the high as a reversal. But we know it's not a reversal because it hasn't followed through yet, right? We know that reversals take strength, pullback, and then strength, right? So we know that this will be a reversal. It's going to go strength, then pullback, and then explode off that moving average, okay? Just like we saw the buyers take control today, right? Up, strong move up, pull back, and blow higher here, right? That's the way you reverse a bear trend. So bottom line is I'm expecting to see a two-legged pullback, right, off the measured move. Usually that brings the moving average over, and usually now sellers will start to think we're going lower. The reality, though, is that the market hasn't shifted directions at that point yet. The odds are still in our favor to go back to retest the high. And so we normally see a pullback to the moving average. That pullback, you know, 75 out of 100 times it's going to fail, and we're going to get that failure into strength, that strength into a pullback, and then a retest of that high. So usually this produces a couple different opportunities. If I draw a trend line down off that high, I can oftentimes grab, right, a bounce off of that trend line as support. Then I can also look for a failure pattern up above that moving average. Then the third and usually the most reliable pattern is going to be that pullback to the moving average just before it goes back up and retests that high. So that's, in a nutshell, that's the plan for tomorrow. And if you've watched my newsletter, this is nothing new, right? This is your typical, right, strong two-legged move up, two-legged pullback, and a retest of the high. I mean, if I've said that once, I've said it a million times on this newsletter. This is a bull market, expecting a retest of high until those bears can take control. So I always like to kind of go over the, you know, what if price goes up, what if price goes down, what if price goes sideways. That way you're ready for everything for tomorrow. So first of all, what if price goes down? Again, draw that trend line over, look for that two-legged pullback, right? Get above it, find that moving average, either the two-legged pullback or the failure or the pullback above the moving average, right? So looking for that two-legged pullback, failure, and then pullback as the market goes lower. I really hope that we get to use the 62.13 because that's a beautiful, what I call a naked reversal line. It's a prior swing high, right, that hasn't been used as support level, right? So it's quite an important level of support. So hopefully we get the pullback that far. But really all I care about right now is getting that second leg lower, because then what that does is it confuses the sellers, and it also opens up a big window of opportunity for the buyers, right? See, if I buy right now, there's only so much profit potential going back to that high. But if I can wait for a nice deep pullback here now the profit is pretty much twice the size. And when there's bigger profit potential, it gets more buyers excited. Now, what if price goes sideways? You can see we're kind of hanging out here right now inside a little tiny range right now, right? What if it goes sideways? Anytime we have a trading range, right, with a bull bias to it, we now know our plan is to buy below the low of that range. There are two ways to trade a range-bound market with a bull bias. One would be a two-try rule below that range low. The second one would be a breakout pullback. Now that breakout pullback, the two-try rule below the breakout pullback, you've got to get that moving average up above the top of that range. Okay, so you want to get below the range or get above the range. The key getting above the range, though, is get the moving average above the range. That way you know you have enough juice to it, right? So again, there's my range. Not much different here. One try, two try, back up in, and then again get that moving average up so we can buy that pullback, right, going forward. Okay, so that'd be the plan for that range if we continue to see this market going sideways in a range here. And now what if price goes higher, right? What if price goes higher? If price goes higher, then hey, guess what? I guess I'm wrong about the two-legged pullback. It will not be it's not the first or the last time to be wrong. Being a trader, you better be ready to be wrong a lot. You know, being a trader is like being a baseball player. You know, you can be wrong a lot, but you know, as a baseball player, if you are correct, you know, if you can put the bat on the ball 40 out of 100 times, you'll be paid millions of dollars every year, and you'll be inducted into the Hall of Fame, right? So trading is a lot like baseball. You got to kind of get used to the fact that a lot of the times you'll be wrong about what you think is going to happen, but all that matters is that you're right when you pull the trigger. So if I don't get that two-legged pullback, that's fine by me, right? I'm going to keep using this channel, though, get that moving average up, and we'll look to buy that pullback, right, on the way down from there. So if it does just run higher here without me, no big deal, right? There's plenty more of that come. We'll wait for the pullback as it goes higher here. And then we have projecting a higher measured move, of course, coming off of that swing right there, right? That measured move up at 63, right, 93. Okay, so relatively easy there for the continuation going higher. Now, I talked briefly about how do we reverse. Let's talk more about that right now. First things first, strong move down. How do we reverse trends? The first thing we need to do is get a strong move lower. Then from there, we got to hold the pullback, right? And then this is where the magic happens. If the bears fail to take control, it'll snap back up and retest the high. Be on the lookout for that tomorrow if you're a buyer. Right, but if the sellers now, if they can take this thing lower on strength, that's the key. Really got to see a strong move lower. If we can get that strong move lower, now what I'll do is I'll connect these lows, bring it up to that high, and look for a sell off of that trend line. Okay, it's what I call a hidden channel. Okay, now there'll also be a chance to draw a trend line overhead, right? So sometimes it will go up and hit that, right, trend line, but typically though, it's going to use that hidden channel. Okay, and guess what the target is? Yeah, the target's back down to retest today's low, right? And I do want to point out though too that we have that prior week level right there, right? So of course tomorrow's a Friday, so don't be completely shocked if this thing strength, pullback strength, but then kind of sits here, right, around that prior week high. You'll notice, right, it's been a pretty popular area, yeah, ever since last Friday, right? So you can definitely see it's been a pretty popular area, and we may end up back there and struggling around that area tomorrow. We'll know more, right, early tomorrow morning. And again, right, wait for that pullback. If we don't get the pullback, be careful buying into that high. Wait for the price to go through that high, and then we'll grab it on the way up to that next measured move here for tomorrow. So now you've got a great plan to impress your friends on oil tomorrow. I look forward to seeing you in the trade with me. Let's jump into some S&P here right now. The E-minis, the Nasdaq and the S&P are both very similar tonight. They both have triangles. Okay, so before we jump in and dive into this here, real quick here, here's the refresher on a triangle, right? draw the trend line up, draw the trend line down. Triangles happen when we're not making higher highs, we're not making lower lows. Okay, most important things you want to be aware of when it comes to a triangle. Triangles are ranges. Stay away from the middle. Okay, stay away from the middle. Okay, so stay away from that middle area of a triangle. Okay, and this is the hardest part. The hardest part is find the edges. Find the edges. Find the edges, right? Find those edges and get into those edges. And what you want to think about now is two try rule, right? So one try down. The thing is on ranges, most of the time when we try to break out of a range, it breaks out really strong. And so you can't just buy the first breakout. You know, if when it goes lower, don't try to buy the first one. Don't try to catch that bullet. Okay, wait for it to pull back to the moving average, wait for it to try again. Oftentimes what you will see is you will see a second try that goes further than the first try. Okay, it happens all the time. That tells you you're looking for the right thing. Then back into the range. So once we start seeing those sellers fail after that one try, two try, then we're trying to go back into that range. Second, right? Same thing happens to the upside, right? We shift back to the upside, one try. Don't try to sell that first try. Wait for the pullback. If we're lucky, we get a higher high on it, and then we see them collapse back down in. One try, two try, and then back down into that range. So that's the basic principles of a triangle. Triangles, if you really wanted to, you could look left here and say, you know, this is just one range right here, right? There's your range high, there's your there's your range low. You could look at this and go, that's the range right there. Okay, I'm calling this a triangle. You can call it potato, potato, whatever you want to call it, right? This is a range. Okay, we're not making lower lows, we're not making higher highs, we're obviously consolidating for whatever reason. Okay, so first of all, we have our no trade zone, stay away from that area. Okay, then obviously we've marked up the swings, right? These are the edges. Okay, the edges at the top, right, and the edges at the bottom. Okay, so those are the key components there for a triangle. At the same time, I've got a measured move support level, just for kicks. That'll act as key support. Okay, measured move level, this will act as key resistance. Okay, speaking of key resistance, prior week close, prior week high. That prior week close is a pretty juicy level right there, right? It's just high enough to make things interesting. What I mean by that is that nobody wants to mess around with the middle of this range. There's no profit to make there. Okay, if I buy the middle, I can only expect it to go so far before it comes back in. Right? Sell the middle, I can only expect to go so far where it comes back in. The goal is get up, right? Nice strong move out. Remember, this strong move higher here is going to look very convincing, right? It's going to make you, and this is what I used to do when I was a new trader, I would see the range, but then I was in the first breakout and go, oh my goodness, that's really strong, right? This can't be a range now. It probably is though. Okay, so don't make that mistake. Okay, I did that all the time as a rookie. I would see the range. I would say, okay, we got a range scenario. I'm going to sell the high. I'm going to buy the low. I'm going to stay the heck out of the middle. And then sure enough, 10 minutes later, bam, right? There's a big, strong breakout. And I go, oh, I can't sell this, right? That's what's going to happen. Okay, it's going to look really scary. Okay, so look really strong. The key is you're not going to sell that first breakout. You're going to stay patient, right? You're going to wait for it to pull back and do it again. Now, again, a lot of times it goes to a new high. And when it goes to a new high, what that does is it almost always fools people into thinking now we're a trend. We're not a trend yet until it explodes higher. Trust me, you're going to know when this thing explodes higher. It's going to take your face off, right? It'll roll higher. Okay, what's happening is all the sellers who tried to fade that breakout, they're getting stopped out, right? And they're being forced to cover their shorts, right? They're being forced to buy their way out. When that happens, this thing will run. What we want, though, is as sellers of these highs, is I want to catch those breakout buyers. See, when I was a new trader, I used to put a little buy order right there. Anybody ever make that mistake? You know, sometimes it works. It works just enough to keep you trying. Right? It works just enough to add another oscillator, another moving average, start reading tape now, right? Trying to predict which one of those breakouts will work. Well, I don't want to burst your bubble, but breakouts are not very effective during range-bound markets. Trending markets, absolutely, right? And because this is a range-bound market, I'm expecting there to be buyers here who are not going to see the big picture. They're not going to see the context. They're not going to understand the story the market's telling them, and they're going to buy that high. Okay, so when they do buy that high, guess what? Now I know we've got buyers trapped in. So when they buy that high, right, and that's why I say the best ones always make a new high here. Now we've got buyers in the move. Okay, they're buying high, the high at that range. Now I'm not going to say this can't be successful because, like I said, some of them will be, right? And sometimes we see ranges turn to trends, but it's rare. It doesn't happen very often. Okay, the odds are not very good. So once this market starts pulling back here again, what's going to happen now to all those buyers? All those buyers who were long from the high, right? How much room do you really going to give it? Right? I mean, how far against you are you really going to let that trade go before you pull the plug and become a seller? Remember, the only way you got to have a buy position to be a seller. And that's why the market dumps back into that range afterwards. Right? That's why it's so fast to move back in. Because once the buyers realize, oh shoot, they got me again, right? The breakout failed. And a lot of buyers, they don't just hit the close button, they hit the reverse button. Right? Out of their long into that short. So that's the psychology. Remember, we talked about the psychology with the strategy in last night's newsletter. That's the psychology happening right outside that range. So again, one try, two try, back down in. Same thing down to the bottom. One try, two try. Again, hopefully they go to a lower low and then back in, right? I know it's scary, right? But you got to just be patient with it. If it's a trending market, we don't do this for trending markets, okay? For a range-bound market. This is not a trending market, it's a range-bound market, right? Lower highs, higher lows. So stay away from the middle, buy those lows, sell those highs, and if at all possible, I'd love to get this stuff a little bit further outside this range. Remember, the bigger it moves up, the bigger it moves back down, and vice versa. Bigger it moves down, the bigger it moves back up, right? Just getting a little tiny move here, there's not much meat on the bone, right? There's not a lot of excitement there. You want to figure out, and this goes for any market, any time frame, find a way to participate with the market's context, right? Bull market, buying at support, bear market, selling at resistance, range-bound market, selling high, buying low. Find a way to participate, right, with the market's context in a way in which you can take a small amount of risk with a big amount of reward, right? If I look to sell here, it's almost one-to-one risk and reward, right? There's my risk, there's my reward, okay? But if I can sell up here, now my risk is here and my reward is right here, right? The carrot at the end of the stick is much bigger, and that usually dramatically improves the odds of our success. Okay, don't forget, tomorrow morning, 8 o'clock Eastern time in the trade room. We'll do it together. Now, you guys are experts now, right, at the triangle. Here we are on the Nasdaq. Nasdaq range-bound, triangle pattern. That tells me to avoid the middle. Sell the high, buy the low. Focus on los failures, right? Using that two-try rule tomorrow morning. So, there's my triangle. Mark the edges. Mark the edges, right? There's my edges. Again, I got a couple measured moves here that I'm using. Measured moves oftentimes, the measured moves on range days are oftentimes the dark horse, right? You don't see them coming, and then all of a sudden you're going, oh shoot, there's a measured move up there, sell it, right? And it becomes a great level of resistance. These are pretty big. What's really nice was that one on the S&P where it was right inside that battle zone. This one's a little bit higher. That measured move is right up towards those highs. So in all reality, I mean, this thing could run 1, 2, and then struggle back down to that range. We could be looking at a short covering rally, right, going up, and then bam, right back down again, right? We had that big down move, right? So short covering rally, we talked about, right, those short covering rally psychology earlier on this week, and we'd be back down to that range. Prior week close, prior week high. You know, it's tough to tell how we're going to use those just yet. Oftentimes, those prior week levels, they work like this, right? They go up, they fail, and they're back down, right? So acting as resistance. Keep your eyes open tomorrow, but we may see go up, right? One try, two try, and going to get stuck up here just because of that prior week high, prior week close. So we'll kind of play that by ear tomorrow. But it's ultimately the same thing, right? Stay away from the middle, Get up, one try, two try, back down, right? Would love to get above that prior week close. One try, two try, right? Back up and keep fading those edges here on the Nasdaq. Pretty simple. There's really not much more to talk about on that. Just stay away from the middle. Okay, it's always the hardest part. At least in my experience, the hardest part was always just staying patient when I was in the middle. This is why I recommend to my new clients, do this slowly, but learn how to read charts on gold, right? Euro, crude, E-minis, right? So if we're sitting here watching, the E-minis and the E-minis are just stuck in the middle, let's go grab Euro, right? Or let's go grab oil. Again, you got to do it slowly, right? Learn one market at a time, and I do it very methodically in my trade room. You'd be amazed at how effective we can be in the trade room by trading all of these different markets, but not jumping all over the place. You know what I mean? There's a thin line between going all over the place and trying to do too much, then to identifying. I always go gold, euro, right? Get those started. See where those are going for the day, then jump over to the crude, see how that's looking, then take a look at the E-minis. And by then, I usually have a good idea of where the best moves are going to happen, what's going to be the easy money for the day, and then you can hone in on whichever market, right, you want to really, dig into. So if tomorrow, if we're sitting in the middle of this range here, don't be shy about going into other markets, right, and participating there, because you have the luxury. This strategy, what I teach in my newsletter, and what we do every day in our trade room, it translates to everything, right? I mean, it's as you can see it. These are different time frames, right? I don't use the same chart time frame for every market. I don't use the same trade management for every market, right? But it's the same basic market psychology combined with technical analysis approach that, I've been teaching and trading every day in our trade room for 10 years now here at School of Trade. How about some gold? Gold is bearish. Beautiful spike and channel pattern. And this spike and channel patterns are pretty simple. They always tell you to look up above the high of the channel, right? And look for selling opportunities up above the high of a channel. Okay, now there's also a really important clue on this, and that is this rising support trend line, right? This support trend line coming up off the bottom here, that's a really, really big clue, and that will hopefully lead into a potential two-legged pullback pattern tomorrow on the gold. Now, gold and euro look very, very similar. You're going to see two distinct differences, though. Looking at the gold here tonight, let's get this on here. We have a spike and channel pattern. Now, the key to a good spike and channel pattern, and this is where patience, this is a lot like trading a range, where I said it's difficult, right, on a range. It's difficult on a range to stay patient. Well, the key on a spike and channel pattern, there are ultimately 1, 2, and usually 3 points of interest on a spike and channel. You'll notice the first one is the base of that channel. Second one here, right, are the two pullbacks. Okay, normally we're going to get three moves lower, right? So 1, 2, 3, and then the pullback. So by the time you see that spike and channel fully developed here now I want to look to get as high as possible to sell. See, the psychology behind a spike and channel is you had a real strong move down. Most people are already in on that strong move down. If they weren't in there, they get in on the first pullback. If they didn't get in there, they'll get in the next pullback. By the time we have 3 legs down, 1, 2, and 3, most of the sellers are already in this market. Now that's really important, because if most of the sellers are already in, how do you get more sellers excited about the market? You've got to get back higher again. The only way to attract more bears into a bearish market is higher prices. You do not attract sellers in a bear market with lower prices, not experienced traders at least. Okay, believe me, I definitely did my fair share of selling low when I was a new trader. And I think that's why I'm a good teacher with this stuff, because I know how difficult it was for me to get over the instincts of being a human and start developing the mindset of a trader. It's really what it is, what it comes down to, right? Stop being a human and be a trader. So we know right now that although there are rookies who will always sell low, I really need to get up in these areas overhead here right? So I can attract more sellers in the market. You know, in other words, stop out some of those sellers, right? Hit their trailing stops and make them get back in, right? Or attract somebody who's already short from way up here, give them reason to take some money off the table and put it back in at a newer price, right? So we got to get that lower price. Now what's happening right now though is we're seeing a bit of this. There's a trend line coming up here. Okay, so that trend line coming up, I'm going to want to sell up in that resistance, but I got to get below it and then use it as resistance on the opposite side. So there's one more wrinkle on this plan. This goes for the gold and the euro, but they're two slightly different variations of this. So spike in channels, sell up at those highs, right? But also too, watch that rising support trend line. So now back to our chart. Okay, so now you can see there's that, right? There's that 1, there's that 2, there's that 3. At this point, we've got to focus on selling high. Okay, so we mark up our highs, mark up our swings. This is the same battle zone we've had almost all week on the gold, by the way, right? Pretty much the same battle zone here. Okay, because that, I love those reversal lines. And if you recall, that reversal line was never hit, right? They got it, they tried to get it, didn't get it though. Okay, so bottom line is that's where our goal is, get up, right, and back down again here on the gold. The problem here is we have that rising support trend line. I am not a big fan of selling into support, right, and neither should you be. So now I go up in the target, into the battle zone, right? I can't trust being a seller into that support level. And I'm going to be very, very honest with you. A lot of times these rising support levels, okay, they don't let sellers take it back and they blast higher. Okay, so it kind of intimidates the sellers. Nobody wants to sell into support. Okay, and a lot of times that produces that strength, pullback, strength. Remember, that's what it takes for reversal. Strength, pullback, strength. Okay, so what I need to do is get below that trend line, right? I got to get below it. And then usually the easiest way to trade it is to wait for the moving average. The aggressive sellers will be selling off that trend line. I personally am a little more conservative. I like to wait for it to go back, get below, and grab it as it goes back down again. Just a little bit more conservative. Just a lot more reliable. A little bit less profit, obviously, right? But a lot more reliable. Get back down below the trend line and then grab it from there going back down. Okay, so like we always say, right? We'll trade probability for profitability, right? So you've got that sell, you got the failure, the strength, and the pullback. These are the three, right? You've got 1, 2, and 3. The first one has the highest profitability, but the lowest probability. The second one is about medium, right? The third one, this final opportunity down here, a little bit less profit, but a world more reliability, right? That's that trade-off between profitability and probability, right? The more profit potential, usually the lower the probability is going to be in that trade. So it's always a bit of a balancing act. That's why reversals, they're unreliable, but yes, they are profitable. You know, for example, right now, you'll notice, right, we are above the moving average. We haven't seen that strong move higher, right? Strength, pullback, strength. Once we see that strong move higher, then we can call this market a bull market. And if we do get that strength, pullback, strength, then we go out, find that new channel, buy that, right? Buy that new channel. Maybe we get a chance to use some of these levels of support down here, prior resistance, new support, right, to be buyer going back up. Because look what we have up here. Right, on gold, if we can get a reversal, we get a prior week close waiting all the way up there at 13.58. That's a pretty big incentive for those buyers if they can take control. But don't forget the prior week low is down at those lows as well. Right, so if we can get down above this trend or get below this trend line here, and then back down to that low, prior week low is screaming at us right now. All right, so what if we don't go higher here though? Right, what if we bounce off the top of this trend line? Right? What if we don't get up top? You know, what if we bounce off the top of this channel here and we go back down? This is what I'm looking for. Right? Strong move down, pull back and go. The hard part's going to be, right? The hard part's going to be not selling as it moves lower. And believe me, this is not easy. This is the mindset of a human. Okay, it is instinctual for us as humans to sell as the market's going lower. Okay, we don't want to do that. We want to see it go lower. Say, okay, now we're seeing proof. Now let's wait to sell high. Let's wait to sell at resistance. The funny part is that the location in which you'd be selling short as it goes lower, you can usually find a better entry, if not equal to or better, waiting for it to pull back, right? So just be patient and wait for it to pull back. Okay, so failure, right, or strength pullback, strength reversal, up and back down, down, up and back down again, right, for that return back down to that low. I think I beat this horse as dead as I can get it here. I think, not that I recommend beating horses, but the old saying definitely applies. I think we covered everything on that gold. If I didn't cover it though, you know where to drop the comment, right, in the comment section below that YouTube video. All right, how about some euro? So now, right, same thing here in the euro, right? But now look, do you see it? Do you see the big difference? What's the big key difference on this euro? Different market, but same basic structure. Euro's bearish. Yes, the spike in channel pattern. It tells me to look for selling opportunities using buyer failures up above the highs, right? Same thing. But what do we see here come off that low? Yeah, this is a much different scenario. Same basic principle, but this is a scenario that almost always, well, I don't want to say almost always, but this is something that definitely gives you a heads up for a possible reversal. Because now I have a really hard time getting away into this trade now, right? You tell me. You're an expert at this now. You've gone through the Harvard masterclass now of technical analysis with me on the newsletter, right? So now how do I get underneath this trend line? It's not going to be easy. I'm going to have to get below it, but then all of a sudden, look where I am. I'm back down to that low now. So you see, it's not easy, right? I don't want to sell the low. I want to sell high. So I have to either get up and then sell here. That way I have enough room so I'm not selling into that support, okay? Not easy. Takes huge cojones. Or I've got to get, right? Or I've got to get through that level of support now. Don't chase it lower and then sell high. So that's going to really be, and again, it's not easy because a lot of times what happens is it'll go down, it'll bounce off that low, right? It'll run and we're gone, right? And we're gone. So this is, you can definitely tell, this could easily now be bears try to sell. Don't make this mistake, right? Bears now try to sell. They don't see that rising support trend line, and what happens? Now the sellers are in. And you know what happens if this market bounces. All of those sellers now are trapped. And how do you get out of a short? You become a buyer. And oftentimes, that's why I say these often lead to reversals, right? Because sellers look at this and they go, I can't get in, right? I can't get in with a failure here. I can't get in until I get below it and then use it. So you got to watch for that move below that trend line. Again, though, this is not going to be easy. Okay, these types of environments are built to stop you out and take your money. So be very careful on that. We also might see it turn into a range, right? Where it kind of breaks down as a range. Honestly, a range will be the best thing that could happen for the bears tomorrow. Because then we could mark up that high and just go, oh, one try, two try, back in. So a range would not be a bad thing. Okay, but that obviously will take some time to see that. And also, too, I'm not going to call a reversal. I don't believe in calling reversals. But I'm telling you, if you see this thing jump off of that trend line, after seeing those bears sort of get through it and they're failing and jumps, yeah, this thing's bullish. Now, if it turns bullish, that trend line is almost irrelevant. Because what will happen is it'll go up, down, and up. Grab that high, hidden channel, bada bing, bada boom, right? And of course, look for that buy off of that channel. And where do you think they're going to go? Just guess. What do you think their target will be for the bulls tomorrow on a Friday? Yeah, prior week close. That sounds like a good target for the buyers. And the prior month and prior week high, just in case, right? They want to have fun with it into the close on Friday afternoon. All right, guys. So out of all of these markets tonight, get some great examples. The euro definitely appears to be the one that has to take the most amount of patience here right now because of that rising support trend line, right? Anything can happen tomorrow, so we'll keep our eyes open. This gold, we definitely should see gold try to get below that trend line, but what happens afterwards, we're going to wait and see. Again, both gold and euro potential reversals here. Nasdaq is range bound. S&P is range bound. Stay the heck away from that middle, right? And of course, don't forget on the oil, waiting for that second leg pullback, right, and a retest of that high. All right. Speaking of a retest of that high, we just keep hitting new highs every single week here on this newsletter, don't we? I hope you learned a ton tonight on the newsletter. I hope you'll share this video with other trading friends of yours. Don't hog all the good knowledge to yourself, right? There's plenty of money to go around out there in the financial markets. That's one of the beautiful things about trading. And don't forget, if you're on YouTube, drop me a post or drop me some comments in the comment section below. Give me a thumbs up. Give me 2 thumbs up if you really liked it this week, right? Subscribe to the YouTube channel. And don't forget, if you want a free trial, come out and join me as a guest in the trade room. Learn the strategy. I'll tell you right now, it will not be a waste of your time taking that free trial. I know a lot of free trials are just one big sales pitch and a bunch of crap, a bunch of garbage, right? If you like my newsletter, if you think I do a good job in my newsletter, you're going to love my free trial. You'll love my free pass. And if you like that, you're going to absolutely love being a beginner, intermediate, or advanced member. 10 years, over 500 weeks, and over 3,000 graduates here now at the School of Trade and growing. We've had a huge amount of new clients join this month, right? And we keep growing like a weed here. Find out what everyone's talking about. Join that free trial. There's links in the description of the YouTube video. And don't forget, I'm always going to be here to answer all your questions. Drop those questions into YouTube. Hit me up on live support. Or just call me in the office. I'm a real person. Yeah, I will answer the phone. Call the toll-free number. I'll pick it up, right? And we'll talk more about your trading strategy. I look forward to seeing you guys tomorrow in the trade room. If not tomorrow, same time, same place. Not tomorrow night on the newsletter. Tomorrow's a Friday, but next Monday evening as well. As always, my name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.